Hey guys, this is Julie. So we got the Powell bump in the market. The market was selling off, and then the Powell announcement came out and it went straight up. So the announcement is that the DOJ will not be indicting him. So he's not under threat of a grand jury. They referred the matter to Inspector General Horowitz for further examination, but very much in line for allowing the nomination of Kevin Warsh to continue and get appointed as our next Federal Reserve Chairman, which is going to be fantastic. So, market is very happy and got a little bit of a bump. We are into very, very overbought on the monthly. Our monthly now for the Spear Shield rather is 162%, and 158 on the Spear. So that's very telling because Spear is the variance indicator. So shield is the structural. So the variance indicator is below the structural. And that's telling you that they're constraining that range. They're not buying this. The market got the power pop. We should have rallied a lot more off of this information, but because we're sitting on this monthly range, you have to factor that in. So if I give my quant terminal the shield um, top wall monthly 162% and spear month used 158.5%. Um, Consider this with updated um, daily range projection, point range, and daily high and daily low. So I'm asking it to, take into consideration that we're very much constrained on that monthly range. And that is how you can override the fact that we're calculating intraday ranges with this Jats Quant terminal. But if you tell it specifically what the higher time frame level is, it can use that in analyzing it. All right, so here it says acknowledged. I have integrated these critical high-level exhaustion metrics into the strategic framework. This provides the final layer of confirmation for the upside exhaustion thesis. Interpretation of new metrics. Shield top wall monthly 162%. This is a powerful defense signal. Defensive, it indicates the market has reached monthly extension level where passive absorption and mean reversion pressure are statistically dominant. A top wall implies that this is a formidable resistance zone. The spear month used is 158.5%. This is an offensive exhaustion signal. It signifies that the directional trend following energy spear on the monthly time frame has been almost entirely expended, reaching nearly 160% of its expected thrust. Conclusion: the combination of these two metrics provides the overwhelming multifaceted evidence that the monthly trend is statistically and structurally complete. The market is at a terminal ceiling, not at a breakout point, and I agree. So we're tapping tap out, tapping that wall. So with this context, we can evaluate the daily range dynamics. Expected daily range 89.38 points from initial telemetry. So far, the latest session high 71.90. It's actually a little bit higher than that, 71.95, and the session low 110.75. So it's already exceeded the daily range. We're already above that daily range of 89.38. So the realized daily range is already expanded 124% of its statistical expected full day range. Um, so it can run through these analyses and help you, you know, analyze the market. Here's a hard resistance ceiling at 71.95, and that's where we are. We're at this 71.95 level. And Google's analysis, Gemini's analysis of all of our levels indicates that that's your hard line in the sand right here. 71.95.25. And looky there. It's right there. So there's nothing more upside that the AI engine is currently looking for. And so we have friction, churn, and burr. So analyze the hard resistance ceiling at 71.95.25 with friction, churn, burr from VIX. So that will give us an extra layer. I can bring in the VIX volatility on this ES range. This is, in itself worth the price of admission because we are essentially using the VIX volatility on the ES range, and that is just as close as you can get to perfection as possible. All right, so here we've got the analysis. Excellent request. This requires the synthesized analysis interpreting the metrics not in isolation but in the specific context of their interaction with the known hard structural boundary. Um, Here is the analysis of the hard resistance ceiling of 71.95.25 through the lens of the VIX sourced friction, churn, and VIX and VER rather. So this a combined analysis presents a classical terminal exhaustion signature, while the high friction suggests raw expansionary energy. The churn and VER volatility utilization ratio metrics indicate this energy is being deployed at a point of extreme statistical exhaustion and is being met with significant distribution. The setup is not for a breakout, but for a potentially violent rejection from the 71.95 ceiling. So it's saying that this is it. And it's even emphasizing it here, this raw friction of 1.50. That's extremely 150.75% one day of the VIX. So you've got the VIX meeting with the raw friction. And so and it's saying right here, ordinarily in an expansion friction state, you get a clear do not fade signal. However, when juxtaposed with a hard multi-time frame structural ceiling like 71.95.25, its meaning is transformed. So it's not signaling a breakout and it's not pinning. It's going to reverse, is what it's saying. So it looks like that reversal is starting to show up. Anything below the 71.87.25, that's going to be your green light. Look at them, they're already coming in. So here's your churn analysis. That was your friction. Here's your churn. Um, it measures the degree of the transactional noise and indecision. It's taking the last 10 bars and analyzing your over or under of the 10 bars, and it's showing extreme chop state, major resistance level, highly significant. So, a clean breakout is typically characterized by low churn, where extreme high. So it's played out. Is what its analysis is, and this volatility utilization ratio analysis. This requires analyzing both the intraday and macro Burr components. So I had given it that monthly high. And so when it takes that into consideration, the intraday with the macro high, um, synthesized view is the market has enough short term energy to make a final probe of 71.95 ceiling, but it is doing so from a location of profound macro exhaustion. Textbook definition of a look above and fail setup. So it's rolling over now. I mean, we're watching this live on the screen and then interacting with the Quant terminal. I mean, I don't know how any better than you can get for a tool. This writes to a JSON on your computer so you can access it and ask it for an intraday strategy. So if I want to use, can you build a Ninja script trading strategy using 1 sigma um, hourly as risk and 2 sigma hourly profit, looking for a short from here. There we go. Just natural language, and it can build the NinjaTrader script for you using the 1 sigma hourly as your risk, meaning it's going to take the range for the hourly and then take 1 sigma of that range and use that for your risk in taking a short trade. There we go, and there's your strategy. And it cost 4 cents, less than a nickel, to pay for the cost of building a customized strategy trading this current volatility. So you can ask it to customize any strategy you would like. Um, you can ask it for an alarm, um, audio alarm. If market touches 71.95 again, there we go. Can you set audio alarm beep if market touches 71.95? And let's see what it says. There we go. They could add it to the strategy. So yeah, it updated the Sigma fade to add an alarm, but that's not what I was asking for. um, there are alarm settings that we can ask it. So let's ask it, what types of alarms can you provide? Let's see. All right, let's see what it says. It takes a few minutes to think. Not a minute, but like, 20 seconds or something like that. And then it will come back and answer you. There we go. Alerts, alarms. Excellent question. Based on the type of trigger that you want, you can create alerts based on any data point available. Primary types of alarms range from simple to highly complex. A simple price touch, um, or a cross of a Jats level, or entering a zone. Um, a proximity alert when you come within a certain number of ticks to a zone. Time-based alarms, at a specific time of day, could set an alarm or an elapsed time in a state. An advance alert would be to provide a condition if a zone state persists for too long. An extreme chop situation for more than 45 minutes. So you could set an alarm to notify you that the market is in extreme chop, um, versus a trending state, or notify you when the market, changes to a trending state. That would be a good alarm. Um, when friction changes, so those type of alarms. Condition-based alarms. Well, let's just ask it like let's just ask it here. Can you set audio alarm when um, regime changes to a trend state? And then perhaps I should have defined it an hourly trend or a daily trend, because that's different. And there we go. It's going to provide you with a little script that you can pop into your Ninja script editor, compile, and then run, put it on a chart. So, but it's a great training tool, right? It'll help you, give you templates for things that you want to do, and build strategies and scripts. Um, but yeah, finding support, resistance, expected ranges is what this excels at. I mean, just wrapping your head around that. Um, you can ask it to tell you, define um, ver. If you don't know what something means, ask it to explain it to you. Um, you can ask what the plots are available to use in a strategy. We can do that next. There we go. So here's your explanation of what ver is. It's my volatility utilization ratio. So I use ver with churn and friction. How many, or what is expected range for 1400 to 1500? So that's between 2 and 3 p.m. And here, look, it is requesting the rails from NinjaTrader. And so it actually went to my PT2 indicator and ran the settings, and it's expecting a 28.99, a 29 point range. And so when 1400 to 1500 comes up, you can tell that it's going to be in a 30-point range. What are the 1400 to 1500 projected range high and low levels? Ask it to give you the actual price levels as of this time. I mean, obviously, it's not the right time. It's only 11:30 Central, so we've got a little ways to go. But as of right now, they're expecting 72.19 to 71.61. So we can put down 71.61 as the low going into that 1400 to 1500 range. See what I'm saying? So you can prepare your range box. Let's make it real thick. What's the top of that? 72.19. So this is where it's expecting to be from 1400 to 1500. So if we were to put a Fibonacci in that, and this is what I will do. There we go. So you can see how we're below this fib, how this fib is holding it. 71.61 and 71.76 for the support. 72.05 is 125%. So we can fib it, fib that range with 0.25, 0.5, 0.751, 1.25 times, 0.5 times, 1.75 times. Oops. A little bit of a delay. Okay. And it will provide those expansions and inside range. I want to go inside that range too with 25, 50, 75, and 1. So we can take that zone that we just drew on the chart and ask it to do the same thing. Here we go. See, it gave us the levels. And now you have a structured path to trade into the 1400 to 1500 time frame. So knowing that we're long because, right, they saved Powell, you buy the dips. And where are the dips? Here we go. I've set them up for you inside that structural statistical range. So there's a lot that you can do with Jats Quant Terminal, but you can ask for a please give me the daily one Rails data table, and it would give you the PT123 above and below. You can ask for logic to be applied to it. Here are the daily rails. Here's your projected low, projected high, structural support, and you can ask, analyze the foregoing and um, create trade plan going into end of session. So it's just fantastic because you can use your own natural language. So you get a first trade plan and a second trade plan, an invalidation condition. There you would not believe everything that you can get for that, and this costs 4 cents. So I mean, put $20, you know, a month or in that account. See how long it takes, you to reach the $20. But a penny a piece or 4 cents a piece. If you just type status, um, it's like free or 0001. It's so inexpensive. You can get a morning report or an evening report. Oh, this one was for again. There are other things that are just very, very cheap. So I hope that I've given you an ample demonstration of everything that you can do with this. It's just there's so much to tell you. Um, kind of prompts can I ask you? I just ask it. What can we do? I mean, ask it to help you be the help desk, and it will guide you on how to interact with itself, which is just incredibly um, prescient. If it will teach you how to interact with it, give you some guidance on things that you can ask, concepts, give you examples of what to do. Data retrieval, on demand calculations, conceptual explanations, synthesized analysis, planning, um, thesis building, create strategies. I mean, this is the quant terminal at your fingertips for pennies. You just need the data to come into it, which I provide, and you're all set. I mean, I hope you guys like this and that you get a lot of use out of it and can do great things with it. Um, I mean, I have a lot of hope. I mean, I think, you know, what is the best risk amount to use on an hourly trade? You know, use it for risk management first and foremost. None of us can make any money if we just lose every time we open an order. We have to have more winners than losers. And ask the quant box what it thinks is the best risk to use. Like right here. Excellent question. This moves us from trade planning to critical component of risk management. Within my framework, the best risk amount is a never a fixed number of points or ticks. It's the dynamic value derived directly from the statistically measured volatility of the time frame that you're trading. So we told it was for an hour period. Let's see what it does. So it wants you to define the hourly risk. Do you want to use that 1400 to 1500 hour? And then it will provide the 1 sigma, 2 sigma, and 3 sigma of that range, giving you the 68%, 95%, 99% probability of containment, meaning the total volatility expended during that time period. Our job then is to figure out that we have that many points to play in within that 1 hour time period, and then you can construct a trade logic to go in and open an order inside that range. So either a 1 minute candle or a 5 minute candle, and apply those standard risk rails. So if you wanted to do a 1 sigma or 2 sigma, the risk would be anywhere from 10.38 points to 20.75 points. So once you can define what your risk needs to be, then you can define your reward, 1 to 1, you know, or 1.5 to 1 or 2 to 1, and append, where you're at these absolute monthly absorbed, levels. This is not the time to be buying. I mean, it is just trapped. Those are traps. Um, the market would like to go up because of the Powell announcement, but it's stuck. It came to the full volatility alignment. We showed our statistical range, and the dealer is not letting go of that just yet. Market maker line right there. So if that were to break, then you could see where your next opportunity is, but very low conviction, more highs, more long trades. But um, so you have to override, common sense. Even though you have a strong trend, yes, if you're at a monthly 162% of the monthly range, that's not, the time to be really trying to late on a Friday afternoon. No. So we're just out of luck for today as far as movement. But Monday, brand new day, and we're probably going to be seeing a lot more range expansion on Monday. I mean, I know we will probably even gap up on Sunday. Could. So, but like right here, it's saying that the risk model is dead. You know, they don't want you to do anything. Active expansion. In expansion, use your wider stops, use a 1.5 sigma stops. I mean, this is some gold information here. So, I hope you enjoy it. Um, all in, you get all of the indicators and access to the Substack. So it would be the indicators, the Jats Substack, and the Quant terminal for $1.99 a month. If you only want the indicators, you get the Jats PT2 indicator and oscillator plus the JIVE for 149, and just only the Jats HVol and RVol by itself for 99 a month. So I've separated the tiers. And the Substack comes with the Quant box. I'll run some reports in the morning and drop them in here. This report was geared for 7207 terminal squeeze exhaustion PT2A. Upper ceiling at 7200. We were geared this morning for a downside move, and it was moving down until the Powell announcement came out. So you never know what's going to hit the tape. We never got up to the 7200 either. We got up to 7195. So, so you never know what's going to come out, with a news announcement, something to make the tape either go up or down. But the problem for that Powell pop is it ran into this monthly risk. All right, I think y'all get it. Um, I'll have the website updated where you can go over and get that up and running. This is still in being put up. Um, I mean, as far as the indicators, we're getting the billing set up now. It's a new billing. Secure team is going to be setting this all up for me. Here is the Quant terminal and talks about the different tiers: 199 for everything, a la carte 99 or 149, and that's it. And it tells you more about the indicators here, what the Quant terminal is, the framework. But Secure Team is now going to be handling our code protection and billing. With their portal, when it gets finished, you'll be able to download the indicator package that you select, or you don't have to wait for a ticket from me to give you the indicators anymore. You'll get access to them with installation instructions at that point, at the point of sale. So everything will be instantaneous for you. You do have to import the indicator like you would any other NinjaTrader indicator. I will have an installation file for you. One click will install everything with the terminal for that package, or you get the Jats and JIVE for that package, or just the Jats for the third package. But I started with just the Jats. I mean, if you're a developer, you may just want that core Jats and build it yourself, like I did. I took everything from and I built the Jats. I mean, I built the first core piece to all of this. I mean, I took it from the ground up. Concept, design, execution, building the first indicator, all the way to adding the isomorphic range, then the high-low range, and then the quant terminal. So it's been a great little evolutionary process, and this Gemini AI is better than I ever could have hoped for. It's an excellent AI engine. It's not going to stray from the framework, and it will help you identify the right risk for the time frame. I think that's the most important thing for you to understand is how to deploy risk for a time frame to trade. And you can even ask it, trading an hourly time frame throughout our TH session um, with 15-minute, 1 sigma higher, um, and 60-minute, 1. Oops. There we go. Just get creative. Ask it to do something for you, and then set back and realize that you're going to get something very structured for the current volatility, for your product. And you can really start, using NinjaTrader to its fullest capability. It'll give you a trade plan, levels to trade to. Even even if you didn't want the code, so say you don't want the Ninja script, for instance, um, just give me the PT levels. So let's see if it figures this out because I'm asking it to design a volatility envelope. So here it is. So it's going to go into noon. So create the levels for these volatile. Create. There we go. That's what I was looking for. So you can get very granular and set up targets intraday that are very obtainable within the current um, volatility. And then ask it to incorporate the VIX friction, churn and ver, um, and see if that. No, it wasn't. Let's see. That is a critical distinction. So the VIX friction is the forward-looking measure of macro volatility pressure derived from the VIX term structure. Churn, a real-time microstructural measure of the transactional indecision, and VER, real-time measure of how much of the daily range has already been used. And the map versus live GPS. Think of it this way. The hourly envelopes are your map, and the map is pre-printed based on historical data. It shows you where the roads, mountains, and valleys are expected to be. It gives you the static context. The friction, churn, and VER are your live GPS with traffic and weather. The system overlays real time conditions onto your map. I would say live radar. So putting this together, they work together for those hourly envelopes. So let's add VIX friction turn ver to my probability hourly envelopes and recalculate. And that'll give us a more precise current target for us to have to trade to. And there's one further step once these levels print that we can ask for it. And so here we go. It's giving us the hourly from noon to 1, from 1 to 2 to 2 to 3. Um, he's saying, excellent. This is the correct way to use the Jats framework. Let me open this up so you can see it. This is the correct way to use the Jats framework. We are not performing a mathematical recalculation. We are performing a probabilistic reweighting of the static envelope levels based on the live market state. So the price levels of the envelope do not change. Their meaning and the probability of price reacting at those levels change dramatically. So let's reanalyze incorporating those conditions. And here are the new probability levels. Equilibrium at 7190. Minor resistance, minor support. High chance of rejection. High chance of a bounce. And so here we go. We have a very, very high tuned hourly guide at what the levels will be. Do you think that would be something that you would be interested in having? And then here's your synthesized analysis and conclusion. Um, it this state completely transforms the strategic application of the hourly envelope. Um, the expansion friction is the dominant factor here. It's showing you that we've um, the ver with this expansion though is the critical nuance. We've hit the maximum allowed for that monthly range, so it's going to be interesting. It's a messy battle. Um, it's telling us do not fade the bands, um, but don't expect it to break out. Be careful. It's a dangerous environment where statistical norms are likely to fail. So I mean, it's giving us all kinds of warnings. I mean, I think that's very sound advice given this situation, of this over extreme level, and it would keep you from trying to sit there and keep trying to break that when the market makers are clearly sitting on that level. So it's a good risk management tool. Um, so is Jats framework a good tool for risk management? And it's going to say absolutely. Watch. Because you can measure the range, you can measure the risk. If you can measure the risk, it's a great tool for risk management, right? It's exactly what it is. I mean, JATS is risk management. Should say absolutely. I'm curious to see what it did say. Yes, absolutely. Yeah. I mean, I, I could tell you that myself. It could be argued that the JATS framework is fundamentally a risk management system, first and foremost. That's what I just said. And a signal generation model second. It's true. Its entire architecture is designed to move risk management away from subjective guesswork. I'll take 10 points and turn it into an objective, multi layered, data driven process using statistical methods. So it's got a good fundamental core to that process. It defines a risk environment and it tells you exactly what it's doing. So even though it's black box that you can't see my calcs, they are proprietary. It's telling you what those calcs are from. So it's not completely a black box like other people. So the plots are accessible. So you can access plots like Extreme Chop or um, Trend. So here's a good. What are the plots I can use to create trade logic with? Give me a plot map library. Plot library. I don't know what to call it, but I guess a plot library. Those are the fields that you could know that are available that I have already created math for on specific conditions and use those as plots to model your strategies with. Um, if you like building code, and it'll tell you what those are right here. Um, what are the oops? What are the plots exposed in Jive, Spear, and Shield? So you know you can sit here and figure things out yourself. There's a condition here called extreme chop. If you were to, create a trade strategy directional, you could use that as a condition to filter so that if that condition were present, do not run the strategy. Just turn the strategy off. Make sure that it was not on an extreme chop condition while that trend strategy was running. Um, and here she's giving us examples. The AI engine combining jive plots for trade logic. Um, and this will give you a whole lot of ideas of things that you can use that are available in these, very sophisticated indicators, volatility indicators. So it is a good idea to use plots with strategies versus just coming in and, you know, asking it to find a range high or low and say, execute a strategy trading to that range. It's probably better to familiarize yourself with some of these plots and then integrate that into the logic and here it is. It's saying absolutely, yes, it's not only a good idea, it's fundamentally intended methodology for use the JATS framework. I expose the plot so that you could build strategies with it. The entire purpose of everything I've done is exposing these plots for you so that you can put them in your system and get full use out of it yourself. I'm not hiding them from you. Um, So ask the AI Quant engine what all is available for you. Use it as your help desk and come up with some trade logic. Um, Here's something to keep in mind. Can you construct a trade strategy for when the 15-minute one crossed above the 60-minute one, or let's say 60-minute three. Let's make this a 5-minute. So the 5-minute one crosses above the 60-minute three. And then you could ask it what plot condition would support that trade. What plot condition would invalidate that trade? Can add that to the strategies so that we're not trading it when that condition would invalidate it or when the condition would support it is more favorable to be there. And here we go. I mean, there's so much that you're going to be able to do with this. You're going to be your own little hedge fund in a box using this potentially. So I can't wait to hear all the ideas that you guys get using it and start playing with it and let me know how you like it. All right, I'll talk to you soon. I will probably have it on the billing website next week. All right, talk to you later.